Most of the attention that we're getting from clients with questions has to do with the payroll protection loan program. The disaster loan program is also highly beneficial to small businesses. The program starts with an application for a $10,000 emergency grant. It has the same employee limits as the payroll protection loan limits. Nonprofits are included, as Carson just pointed out, with paycheck protection loans. The grant is part of a disaster loan application. That application is already available on the Small Business Administration's website. It is an application you would fill out from the website, use that as the application form, and then submit that to your lender. The rules call for an anticipated 3-day turnaround for the $10,000 grant after applying. So for qualifying businesses that qualify for the grant, if you make an application within 3 days, you should receive a $10,000 grant. That grant is not required to be repaid, and that is true even if the applicant's disaster loan application is denied. If the applicant has a paycheck loan, the $10,000 that's forgiven on the paycheck loan, the $10,000 is forgiven on the grant is counted towards the forgiveness on the paycheck loan. In other words, there's no double dipping on forgiveness between payroll protection loans and the EIDL grant. You can use the grant to pay payroll, any increased material costs, your rent or mortgage, or, and this is quoted from the legislation, repaying obligations that cannot be met due to revenue losses. So it is a fairly broad application of what the funds can be used for. As with the payroll protection loan, we're telling people that they should get their applications in as quickly as possible because there is a limited amount of funds available. Common comments that we've heard in other presentations is that they think that the Congress will allocate additional funds both to the EIDL grants and the payroll protection loans, but because that's not guaranteed, good practice would be to get loan applications in as soon as possible. Somewhat overlooked in the EIDL grant, because first thing that people see is the $10,000 grant that can be paid out in 3 days. But somewhat overlooked is that you can also apply for a disaster loan. Federally declared disasters in hurricanes, tornadoes, floods, fires. The COVID crisis has been declared to be a disaster across the United States that qualifies for disaster loans. The loan is easier to apply for now. It is a streamlined process. The approval will be based on a credit report, or the bank can use alternative appropriate methods to approve the credit, which I think probably means that if the lender is incentivized to make the loan and otherwise the applicant meets all of the requirements for a disaster loan, credit is not going to be as important in the application process. The first $200,000 does not require a personal guarantee, and that's very important for small businesses, because if there is a default, then the guarantee cannot be enforced against the owner of the business. There's a waiver of the 1 year in business rule and waiver of the credit elsewhere requirement. And this last line is important, that 6 months of this loan is paid by the SBA. So this is more than a deferment. It is not that you don't have to pay for 6 months and interest doesn't accrue for 6 months. The SBA will pay the banks directly for 6 months of your disaster loan. So if you qualify for a disaster loan and it's granted, you get 6 months of payments free as an additional benefit. And that also applies if anyone has an existing SBA loan. Contact your lender and confirm that you do not need to pay for the next 6 months, and that those 6 months will be paid by the SBA. The lender should say that that is the situation. In February of 2020, just this year, a new Subchapter 5 of Chapter 11 was adopted by Congress, or became effective. It was adopted in 2019 and became effective February 2020. Chapter 11 is the reorganization chapter of the Bankruptcy Code, as opposed to Chapter 7, which would be personal and business liquidations, or Chapter 13, which is a personal reorganization. The new Subchapter 5 applies to Chapter 11. The debt limit established in February of 2020 was $2.7 million. meaning that if the business had more than $2.7 million worth of debt, it would not qualify under Subchapter 5. It would have to file under the regular Chapter 11 procedures. The debt limit has now been increased to $7.5 million. The benefits of a Subchapter 5, best way to describe it is that it is much easier for business to get through a Subchapter 5 bankruptcy in Chapter 11 than it would be for business to get through a regular Chapter 11 filing. The benefits include plan exclusivity. No other creditor can propose another plan to compete with the bankrupt debtor's plan. You can override plan objections if the plan is fair and reasonable. Essentially what that means is if the debtor pledges its disposable income like it would in a chapter, an individual debtor would in a Chapter 13, the plan will be confirmed. There is no disclosure statement requirement, which shortens the time for that plan to be approved. The money that's received, if a debtor receives money under the COVID programs, either the payroll protection loan or the emergency grant, that does not count towards the disposable income under the Subchapter 5 amendments to the COVID amendments to Subchapter 5. It also allows, if a business is already in a Chapter 11, it allows the business to amend their plan to adjust to the new circumstances caused by the COVID crisis. One of the gaps in the COVID legislation is protection and benefits for businesses that employ between 500 to 10,000 employees. Most of the benefits that we've discussed today between the payroll protection loan and the emergency disaster loan grant apply only to businesses that have 500 or fewer employees. There is a question about whether a business that had 500 or more employees going into the crisis who had to lay off those employees can then qualify under the small business benefits of the payroll protection loan or the EIDL grant. The best way to answer that is if you think that you qualify, apply. If there is a regulation that is determined to disqualify businesses that laid off employees before the crisis or before application, let them enforce that requirement. If you've laid off employees and you now have fewer than 500 employees, apply under the payroll protection loan and emergency grants and see if the application is granted. The problem with the mid-sized business program is that it is still to be implemented. The program itself is vague. It says that the Secretary of the Small Business Administration shall endeavor to implement a loan program. So it's not in place yet. The loans will have 2% interest. There'll be the same 6-month deferment of payments under this loan program. The mid-sized business, though, has to pledge to maintain 90% of its employees to qualify for that loan. So that will make another difficulty for applying for the mid-sized business loans when those do become available. It's under the same statute in the CARES Act as the air carrier, cargo carrier, and national security loan programs. Those are the ones that are getting a great deal of press because of the requirements that companies that benefit from that program can't do things like buy their stock back or pay dividends, and this comes under the same requirement as this mid-sized business loan program comes under those same requirements. So those are the benefits for mid-sized businesses. The best thing that can be said if there is an employer that qualifies in the mid-sized business is to continue to monitor on a daily basis to find out when the mid-sized business loan becomes available and what the requirements are for it. The last thing we want to go over is some of the other relief in the CARES Act. This is other relief. It doesn't necessarily involve businesses, but businesses are comprised of people, and those people have families, so we thought it was important to go over the other relief that is given in the CARES Act. There is student loan relief. Payments on student loans are deferred through September 20th of this year. There is no interest on that deferment, so anyone who is paying student loans currently will be relieved of their payment obligations through September 20th of 2020. Also, there can be no collection activity on defaulted student loans for that same period. There is an installment plan deferment for taxes. So if a business or an individual is on an installment plan for payment of delinquent taxes, there is a deferment of those payments from April 1st to July 15th, and that isn't in the CARES Act. That is an IRS executive order that anybody who is on an installment tax payment plan will have April 5th to July 15th deferred and will not need to make payments under that plan. There is also an eviction moratorium for individuals. If property has a federally backed loan, that includes apartments. So if you know individuals who are having difficulty making their rent, they should make an application to their landlord for an eviction moratorium so that they cannot be evicted for non-payment of rent. For apartment owners with a federally backed loan, there's a 30 to 90 day forbearance. So multifamily unit owners that have federally backed loans also get a benefit of a 30 to 90 day forbearance on their loan payments. And last is homeowners with federally backed loans can apply for a first-time 180-day forbearance and a second forbearance, or a total of 360 days if they've been impacted by the COVID crisis. There is also a foreclosure moratorium on any loan that is associated with federal insurance, federally backed loans, and that foreclosure moratorium goes through May 18th of 2020. So there can be no foreclosures nationwide on federally backed loans. So those are the other areas of relief besides relief to business under the CARES Act.